I wanted to start off a little light. Made you guys fill out the Google form. We really appreciate it. It's good for us to see why you're here. So here's, without naming names, it's kind of funny. The first couple people that were filling it out, why you guys want to get involved with the fund or with Foundation Capital in general. A lot of you guys are in the same boat that are likely in this chat here right now. So cash flow, extra income, return on investment, watch the webinar for fun, passive income, cash flow, diversification, invest passively, diversify, exploring options, adulting. I like that one. Passive income. You know, if you follow me on Instagram, it's one of my favorite words, passive income. Who am I? We're going to go through the team here. This is Foundation Capital. Myself, Jeff Weibo. Who am I? If you don't know who I am, my real estate investing journey started in 2012. I had just come back from 2 tours protecting the Defense Minister of Canada, one of my jobs with also the Chief of Defense Staff, close protection team with the Army overseas in Afghanistan. Came home with a lot of cash, trade my life for money, like risk my life for money. And then everybody's like, you should buy real estate. I'm like, well, what's this real estate? So I ended up buying real estate, but not the way most people probably did. I bought an investment property, a triplex, and I ended up living in the bottom unit of the triplex. This is now called house hacking. Back then, they just called it like living with your tenants, I guess, because what this did for me was I really learned the ins and outs of being a landlord and also student rentals, which is very hands-on and very needy and not like a normal Ontario tenant, but like they want everything at all times. Parents are on you and you're a brand new landlord learning all this on the fly. I studied with the Real Estate Investment Network back then. And basically I lived for free living in the bottom unit, but then I met my now wife, but girlfriend at the time. And she was like, you need a better place. I was like, okay, I probably do. So I ended up buying a nicer duplex and moved into the duplex and rented out the top unit of the duplex, lived in the bottom unit of the duplex for free, but then rented out that bottom unit at the triplex. So now I had like 5 units and I'm managing the other property from far now while living in another one. Did this for a while and then eventually decided I need to get a job because that's what you do, I guess, in this world. So I thought, well, being an Army guy, I'm like, I don't want a real job. So what could I do? I became a realtor, which is a perfect fake job. And from there, I decided, well, I'm already in the investment property world. I might as well continue down this path. So I decided to be relatively an investment property realtor. I did still get like the odd people's house to sell, which was great, but investment properties where it's at. I could coach people on how my experience is being a landlord and about the leases. And this was very good for me. And I started getting on social media and building more of a brand. I started doing the Weibo limo tour. I don't know if anyone's in the chat who have ever been on a Weibo limo tour, but definitely Mitt and Pearson have been on a Weibo limo tour. And what this was, I rented a limousine, brought investors onto the limo, traveled around London, Ontario, for example, and went to maybe 7 or 8 properties that were all multifamily. And we'd go through them. We'd chat about it. I'd bring on contractors, I'd bring on other realtors, I'd bring on the mayor of St. Thomas once when we were in St. Thomas. And it was just a great day, but it was great. But me, Mitt, and Pearson were like, man, we'd go on one and it'd be such a great deal and we didn't buy it. And then we go on the next one and it'd be another great deal. And eventually we're like, hey, enough's enough. We need to start buying real estate. And it was on a limo tour where we saw a 6-plex, and it was kind of from there where Foundation Capital was formed. And we bought this 6-plex with this crazy long, kind of very long closing, which simulated a vendor take back pretty much. It was like a 1-year closing that we got to operate the property. Anyways, Foundation Capital was formed. And from there is kind of the foundation, quote unquote, we started going from, now we have 281 units. That was 6. Now we have 281 units in 3.5 years, now with over 50 million assets under management. And I'll pass it on to Pearson now to tell a little bit about his origin story and how he kind of got up to that limo tour as well.
Yeah, appreciate it, Jeff. Yeah, so for me, guys, as you know, I'm a chartered accountant by trade, and funny enough, that's what ended up ultimately leading me to real estate. So, did the traditional path, went to school, graduated, got a job at a Big Four accounting firm, and I remember there was just so many nights where I was working ridiculously long hours, and sometimes when you did the math, it all often in the early years ended up being you're making less than minimum wage doing this. But the goal is, as you move up, one day you're going to have a chartered accountant position that's paying you a lot of money. So while I was getting frustrated doing that, I was thinking, okay, what's a way that I can really fast track myself in building wealth and actually make some real money on my own timeline versus just a career? And, the common theme I continued to find was invest in real estate. So, talk to a family friend, and like many people, when they think investing in real estate, it's go ahead, purchase a pre-construction property, sit on it for a long time, and it'll go up in value, and that's how you make money, which, for some people, it still works today, and it can be a very passive strategy. So dived in, started dabbling with some condos. Then when I had met some people and learned a little bit more about technical investing, so we teamed up and he started teaching me the ways on what I call more technical real estate investing, looking at cash flow projections, the BRRRR strategy, forcing appreciation versus just buying a pre-con and sitting on it. So, we continued to team up, buy some duplexes, triplexes, and work our way up. And, over time, formed Foundation Capital, and now we're at 281 units, and it's been quite a journey. So I think the one thing that's really allowed us to get here is we're very data-driven and analytical people because of the numbers background. So, each member in the team has their different strengths. I like to say one of mine is definitely using the data to make decisions and getting that operational efficiencies in place. So, that's something that's allowed us to succeed. And I think it's part of the gig that I really enjoy. Man, how about you take it over?
Awesome. Thanks, Phoebe. So yeah, similar background to Pearson. We actually went to high school together in grade 11 for accounting. That's how they actually lured me to become a CPA. My parents are blue-collar background. They came and said, hey, do you want the guide to ruling the world? Become a CA at the time, right? And I was like, what the hell is this? They're like, oh, you can be this age and make $100,000. And, that was unheard of for me. So I was like, all right, this sounds like the most amazing thing ever. Fast forward, I'm working co-ops and stuff at PwC, and I'm like, this is insane. Like, this is way too many hours. I need to be able to escape this, similar to how Phoebe was thinking. But my answer was I'm not driving an hour plus to St. Catharines. I'm just gonna do dividend paying stocks. We both went to school at Brock as a reference. So in school I looked at it, but we just never had the money to do so. So, just kept investing in dividend paying stocks, was kind of looking for hey, how can I kind of move forward out of this. And I went from PwC to another smaller firm, which is how I ended up in London, meeting Jeff and going on those limo tours. And as many as you might think, you might have assumed that I went on the limo tour and started buying up all the properties. I was actually the one being like, no, I don't know. I haven't done this before. I don't want to do it. Man, we're talking triplexes at $200,000 in London, Ontario back in 2015, 2016, right? So it's crazy to see how much things have changed. But yeah, pretty much first duplex deal, I finally was like, okay, you know what? I ended up working at Dream Unlimited afterwards, which is an asset management firm focused on real estate. But I managed a $1 billion portfolio of assets for wind turbines and solar panel projects, doing the same thing of kind of burring them, which was increasing the revenue on those and decreasing the expenses to push the NOI up. And at the same time, I was looking at it to do it for myself. So I was like, man, how is this company pulling out so much money for themselves? And so finally a duplex came up. It was 140 grand. I was like, all right, I think I got 16K. I need another 16 to close the thing. That's when I called PV and, we got that deal done. But what that really did more than anything, more than just that individual deal, it really further advanced us into understanding the BRRRR strategy. We were successfully able to BRRRR that along with a number of other properties. And it gave us that experience to kind of do everything under the sun, whether it was flipping properties, Airbnbs, long-term rentals, short-term rentals, all of that stuff. And what really has worked for us, even let's call it cross-border, what's really worked well for us has been the apartment building BRRRR strategy. So, we both started an accounting practice as a result of meeting a bunch of people in the real estate network in London as we came to try to find properties. And they kept saying, hey, you guys are CPAs. Why can't you just do our stuff? And so as a result, we started an accounting practice, and Jeff was building his real estate business. And during that time, we were all advising our clients what's a good deal, what's a bad deal. And because we're running the numbers, we're like, hey, this makes no sense. Like, people buying things that aren't cash flowing when they want cash flow just because somebody sold it to them. It really came down to, like, are the people advising you really investors and stuff like that? So there's a lot of bad information out there that we were already helping fix, and we said, you know what, this is crazy. We're out here, we're not even buying. We haven't been buying real estate for the past 2.5, 3 years. What are we doing? And then we said, okay, in order to make this work, we got to do this full time. We got to build it as a business. And so we met together in 2019, and we formed the company and hired a full-time property manager even before it was necessary. And as Jeff was mentioning, we started off with a sixplex. How we did our deals along the way to get to the 281. We initially started off with joint ventures where we were able to significantly burr the property and return a lot of excess capital back to the investors. Along that way, we realized, hey, you know what? We can probably not take on JV partners and just be able to do it ourselves, so we keep more of the pie. And the way we did that was through more higher debt leverage, knowing that as we got more turnovers on units, the value of the building would double, and then the loan to value would make sense for us to take all our money back plus some. I know some of you guys who are here on today's call were also private lenders who helped us along the way with covering renovation costs as we turn over these buildings, and have enjoyed those returns for years. But there's also a number of you guys who reached out and said, hey, we want a piece of the action. We want some equity. We want to be able to see some of the upper side of that. And, we've got TFSA funds, RRSP funds. Like, how can we sort of make this work? And kind of when we looked at that, we said, you know what? The way for us to be able to do so isn't really going to be through registered mortgages, because was one way that people could access it. That would only give them the debt amount. There would be no equity. So we said, we put our heads together, and that's how we came up with a mutual fund trust strategy, which allows individuals to be able to pool their money together and invest in real estate. And with that, I will pass it to PB to talk more about that structure.